welcome to the deep dive. Here we don't just skim the surface. We really unpack complex information to give you the clearest, most actionable insights. And today, we're taking a deep dive into UnitedHealth Group, Inc. That's NYSE, ticker UNH. We've gathered a whole stack of analysis when, company profiles, financials, market trends, even a look at the technical charts, all to give you, the American investor, a really comprehensive understanding of this healthcare giant. Our mission today: cut through the noise, look at the current challenges UNH is facing, and figure out what it all means for you.
Yeah, and what's really fascinating here, I think, is that UNH isn't just, another stock. It's actually a cornerstone of the U.S. healthcare system. And its recent performance, well, it's raised some pretty significant questions for investors. We'll be connecting the dots between its core business, these headwinds it's facing, and the bigger economic picture.
Okay, let's unpack this healthcare powerhouse then. UnitedHealth Group isn't just big. It's the largest healthcare company in the U.S. and globally. Seventh largest company overall. That's huge. But how does a behemoth like this actually work? How does it operate day to day?
Right. So at its core, UHG operates through two major segments, UnitedHealthcare and Optum. Think of them as two sides of the same coin. UnitedHealthcare, that's the health insurance arm. This is where they provide all the plans, employer-sponsored, individual, Medicare Advantage, Medicaid, the whole range. As of December 2024, they were serving about 51 million members globally. 1 million of those outside the U.S. And this segment, UnitedHealthcare, typically brings in maybe 70-75% of UHG's total revenue. It's the giant part.
70-75%, okay.
Then you've got Optum. And Optum is, it's their healthcare services arm. And this itself is actually divided into three key pieces. You have Optum Health, which delivers care directly, primary, secondary care, big focus on value-based care models.
Value-based care,
Yeah.
Getting paid for outcomes, not just visits.
Yeah, exactly. Then there's Optum Insight. That's the data analytics technology and sort of operational services side. They help other healthcare systems run more efficiently.
The tech and data piece.
Right. And finally, Optumars. That's the pharmacy benefits manager, the PBM. They manage drug costs, improve access to medications. It's a huge lever they pull.
So hearing about this structure, insurance, and services all under one roof, it sounds incredibly powerful. What does that integration really mean for investors? What are the core strengths that come from that?
Well, that integrated model is a key competitive advantage, or at least it has been. It allows for cost efficiencies, definitely, and data-driven decisions that, ideally improve patient experience and health outcomes. Their market dominance, the sheer scale, the data capabilities through Optum Insight, and just the consistent growth driven by U.S. healthcare spending and our aging population. Those are fundamental strengths.
Okay, fundamental strengths. But
yeah.
Let's get into the numbers now. How has this giant been performing financially, especially recently, given, all the headlines?
Yeah, the numbers story is interesting. UHG has sustained really robust revenue growth. Their TTM revenue that's trailing 12 months as of March 31st, 2025, hit $410 billion. That's billion with a B.
Wow.
Yeah, an 8.06% increase year over year. For the full year 2024, annual revenue was just over $400 billion. Net income was $15.24 billion, which is about a 5.4% net margin. And free cash flow, the cash left over after running the business and investing for the last 12 months, was a very strong $24.86 billion. Really solid.
Okay, those are impressive top line and cash flow numbers. But here's where it gets, as you said, interesting, maybe even concerning for investors.
Yeah.
Despite those big numbers, UNH has faced some serious headwinds. What happened with their recent earnings, and why is the market so worried?
You're right. There's a real disconnect there. UNH has basically been hit by a double whammy. Rising medical costs and increased regulatory scrutiny. Their 2024 annual EPS earnings per share came in at $15.64. That was a huge miss compared to expectations and way down from $24.12 in 2023, a big drop.
Ouch.
Yeah. And the market reacted sharply after their Q1 2025 earnings on April 17th. They underperformed again and the stock took a hit. Now, looking ahead to Q2 2025, those earnings are due July 29th. Analysts are forecasting a much lower EPS, around $4.48. That's way down from earlier estimates of like $5.70 to $6.50.
A big cut in expectations.
A very big cut. And maybe most critically, the company actually withdrew its full year 2025 profit outlook back in May. They'd previously guided to $26 to $26.50 per share.
Pulled guidance entirely. Why?
Primarily due to higher than expected medical costs, especially Medicare-related issues. So now analysts are scrambling, recalibrating their full year 2025 EPS expectations down to maybe $18-20, a huge adjustment.
So what are the specific issues driving this pressure? You mentioned medical costs and Medicare.
Yeah, it raises the question, what's really going on? The core issues seem to be a sharp rise in medical costs, particularly more people, seniors mostly, using outpatient services more than expected. That hits the insurance side hard. Plus, you've got this persistent regulatory uncertainty around Medicare Advantage plans, things like payment rate cuts from the government and these ongoing fraud investigations. That adds a layer of risk.
And the CEO's change on top of all that?
Exactly. Andrew Whitty resigned suddenly, and former CEO Stephen Hemsley came back. That just added an element of management uncertainty right when they needed stability.
Okay, so a lot of turbulence. Given all that, how has the stock itself actually held up? And what do the current investment metrics tell us? Is it looking cheap or is it still expensive?
Well, the stock has definitely seen a significant decline. No way around that. The market cap total company value fell to around $255 billion as of late July 2025. Down sharply from about $460 billion in December 2024. So a big haircut. The share price is hovering around $281, way down from its 52-week high near $630. Valuation-wise, its price-to-sales ratio, or PSR, is about 0.62x. Now, for a large healthcare services firm, that's pretty low. It definitely reflects that price drop. But despite these pressures, the company still shows a high return on equity, ROE, of 21.8%. That means they're still using shareholder money efficiently to generate profit. And its beta is low, 0.45, which suggests it's less volatile than the overall market, even with all this drama.
Less volatile even now.
Yeah.
Interesting. What about dividends? For a lot of American investors, especially in times like these, a solid dividend is key. How's UNH doing there?
That's actually one of the brighter spots in the current picture. UNH has a strong history of returning cash to shareholders. They're paying a quarterly dividend of $2.21 per share right now. That works out to about $8.84 annually.
And with the lower stock price.
Exactly. With the share price around $281, the dividend yield is about 3.15%. That's relatively high for UNH, mostly because the price has fallen so much.
This is sustainable.
Seems to be. Their payout ratio is around 50.6% of earnings, which is quite manageable. And what's really impressive is the dividend growth, 16 consecutive years of increases. And a 5-year average annual growth rate of over 14%. That's strong.
16 years. That's a good track record.
Yeah, and their free cash flow covers that dividend very comfortably by about 31%. So the payout itself looks pretty safe, even with the current headwinds.
Okay, so a solid dividend picture despite the stock price woes. Let's zoom out a bit. UnitedHealth doesn't exist in a bubble. How do the broader healthcare industry trends affect its business?
Oh, absolutely crucial. The U.S. healthcare industry trends are, well, they're a mixed bag for UNH. On one hand, overall healthcare spending keeps rising. Aging population, chronic diseases, new tech debt, it all pushes spending up. That's generally good for UNH's revenue.
More money flowing into the system.
Right. But it also puts huge pressure on their insurance side, UnitedHealthcare, to control those very same rising costs, a double-edged sword. Then there's Medicare Advantage, huge growth driver, lots of seniors signing up. But as we mentioned, government payment adjustments and these fraud investigations, those create ongoing regulatory challenges and can definitely hit profits.
So growth, but with regulatory risk attached.
Precisely. Another big trend is the shift to value-based care. Moving away from paying for every little service towards paying for good outcomes and efficiency. This is actually a positive for Optum Health, which is built around that model.
So Optum benefits from that shift.
It does. And finally, digital health. Telehealth, AI diagnostics, wearables, all that stuff. It presents big opportunities for Optum Insight to boost efficiency and maybe find new growth areas.
Okay, so industry trends are complex. Now, if we connect this to the really big picture, broader service industry trends, macroeconomic stuff, how does that fit in?
Yeah, you can't ignore the macro environment. Healthcare services, like many services, are vulnerable to inflation, labor costs, equipment, drugs. UNH has to manage that either through higher premiums or making Optum even more efficient.
Always managing costs.
Always. And regulation is constant. Health insurance is heavily regulated, very sensitive to political shifts, especially around Medicare and Medicaid. Think about potential policy changes after the 2024 election. That could really impact things.
Right. Election years always add uncertainty for healthcare.
Definitely. Labor shortages are another factor. If
Yeah.
there aren't enough skilled healthcare workers, labor costs go up, hitting Optum Health's expenses, and then just general economic stuff. Growth, inflation that affects people's ability to afford insurance, employer plan enrollment, interest rates affect UNH's debt costs, and maybe overarching all of it, political uncertainty, particularly around big healthcare reform ideas. That can really spook investors across the whole sector.
It's a complex web for sure. Okay, every investment carries risk. What are the key potential pitfalls for UnitedHealth Group that investors really need to have on their radar right now?
There are several significant risks, definitely. Number one, without a doubt, is regulatory and legal risk.
Hmm.
The Department of Justice investigation into Medicare Advantage, potential fraud, antitrust concerns. That's a huge unknown. It could mean big fines, forced business changes, maybe even selling off parts of the company. It's serious.
That sounds like the biggest cloud hanging over them.
It probably is, yeah. Then there are the rising medical costs we keep mentioning. Higher use of services, especially by seniors, eats directly into their profit margins via the medical care ratio, the MCR.
Right, the MCR going up is bad for profits.
Exactly. Third, cybersecurity. That massive attack on Optum's Change Healthcare back in February, that showed just how vulnerable they can be. These attacks mean financial losses, operational chaos, and loss of trust.
Can't forget cyber risk in this day and age.
Absolutely not. Fourth, management uncertainty. The sudden CEO swap creates questions about strategy and execution right when they face major challenges. And finally, competition. Despite being huge, UNH faces intense competition from other big insurers like Elevance, CVS Aetna, Cigna, Humana, and also specialized players in Optum service areas. It's not an easy market.
That's quite a list of risks. So what does this mean for UNH's competitive position? Can they actually withstand these pressures? Or is this maybe a sign of deeper problems?
That really is the million-dollar question, isn't it? Despite all those risks, UNH does have some formidable internal strengths. That integrated model, United Healthcare plus Optum, it's a real advantage over insurers who don't have that services arm. Gives them more control, more data.
The synergy we talked about earlier.
Exactly. Their data analytics through Optum Insight are massive, crucial for efficiency, quality, understanding the market like nobody else. And they still generate strong free cash flow that supports the dividend, allows for investment. Their huge customer base gives them scale, market power. It's hard for others to compete with that. And, history shows they've managed crises before. They've shown resilience. Now, the current legal and regulatory stuff is a major test, no doubt. But they do have a track record of navigating choppy waters.
Okay, track record of resilience. Let's look at the stock chart conceptually. It's clearly taken a big hit. While we don't have real-time data flashing, what can a technical perspective tell us about where it might be headed? What should an investor look for?
Yeah, looking at the chart conceptually, that sharp decline definitely broke through some important support levels. To find a bottom, you'd expect new support to form, maybe around historical lows or big psychological numbers like $250 or $300 in those old support levels. They might now act as resistance on the way back up. Tough ceilings to break through.
Makes sense. What about trends?
Trend-wise, the moving averages are likely in what technical analysts call a death cross. Short-term averages falling below long-term ones, that's a strong bearish signal, suggests the downtrend is firmly in place. For any kind of reversal, you'd need to see the price climb back above those key averages and stay there.
And volume. Does trading volume tell us anything?
It can.
Mm-hmm.
High volume during the big drop likely indicates panic selling. What you look for as a potential sign of a bottom is maybe volume picking up again as the price stabilizes or even starts to nudge higher. That could signal buyers stepping in. Indicators like the RSI, the Relative Strength Index, might be showing the stock as oversold, meaning the price fell too far, too fast, maybe below a level of 30.
Oversold means it's due for a bounce.
It can hint at a short-term technical bounce, yes. But, and this is crucial, you really need confirmation from multiple indicators before jumping in. Trying to just catch a falling knife because the stock looks oversold is really risky. You need signs the trend is actually turning.
Don't try to catch a falling knife. Good advice. Okay, so pulling this all together, the fundamentals, the risks, the technical picture, what's the key takeaway for the American investor looking at UNH today? Buy, sell, hold, wait.
Well, it's clear UnitedHealth Group is at a really critical juncture. It's still this dominant force in U.S. healthcare, strong fundamentals, great history of growth and dividends. But it's navigating some very serious short-term headwinds right now. Those regulatory risks, the legal investigations, rising medical costs, they are significant. So for a, let's say, conservative approach, it probably makes sense to wait for more clarity. The Q2 earnings on July 29th, and especially any new guidance or strategy update from the returning CEO, Stephen Hemsley, those will be critical data points.
Wait for more information.
Exactly. See how they plan to tackle these challenges. Risk management is absolutely key here. You need to watch how these regulatory issues and cost pressures evolve very closely. Now, from a long-term perspective, if you really believe in the fundamental growth story of U.S. healthcare, and you believe UNH has the strength and resilience to get through this,
Then the lower price might look attractive.
then the current depressed share price could be seen as a potential buying opportunity. But, that really hinges on strong conviction that they will successfully navigate these problems. It's not a slam dunk. And always, always perform diversified analysis. Don't just look at the stock chart. Look at the company filings, analyst reports, keep an eye on healthcare policy news. Build a complete picture.
Which really brings up a crucial strategic point. How will UNH management actually communicate their plan? How will they try to reassure the market and turn this ship around in the coming months? That's going to be key to watch.
Well, what a deep dive. UnitedHealth Group is clearly facing an extraordinary test right now. Its fundamental strength, its importance in the U.S. healthcare system, that's undeniable. But this current wave of regulatory heat, rising costs, the leadership change, it definitely creates a very complex, sort of murky picture for investors. It really does. And it's a situation that highlights why you need critical thinking as an investor. You have to look past the scary headlines, understand the underlying business mechanics, and think about the long-term implications. The big question for you, the investor, is this. Are these current challenges a sign of a fundamental, permanent shift for UNH? Or are they more like a severe but temporary storm that the company's strengths, that integrated model, that cash flow will allow it to weather? Your own analysis, your own conviction about the answers to those questions, that's what really matters here.
We certainly hope this deep dive has given you a clearer, more informed perspective on UnitedHealth Group as you consider those questions. Definitely stay tuned as more details come out from their Q2 earnings and any regulatory updates. If this was helpful, please subscribe to the deep dive for more insights like this. Thank you for joining us, and we'll be back soon with another deep dive.